Welcome everyone. We're just going to give it a minute so that everybody can get logged on, and then we will go ahead and get started. Welcome. I see that people still are joining, but we are a minute after, so I am going to go ahead and get started. Before we get started, I'd like to go over a few items so you know how to participate in today's event. You're listening in using your computer speaker system by default. If you would prefer to join over the phone, just select telephone in the audio pane, and the dial-in information will be displayed. You will have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane on the control panel. You may send in your questions at any time during the presentation. We'll collect these and address them during the Q&A session at the end of the presentation. Again, good afternoon and welcome to today's webinar on 2021 Business Resource Redefined. Today we have a full panel of experts here to speak on various COVID relief programs. We have Benjamin Wood, a community banker, president of Range Bank, speaking on the second round of the PPP funding. Next, we have Amy Berglund, the Director of Business Initiatives at InvestUP, touching on Michigan Small Business Survival Grant Program, which is with MEDC. Sarah Jennings, the Director and Principal of Accounting and Outsourced Solutions and Director of Strategic Initiatives and Community Engagement at Costerisan, and she is here to speak about the Employee Tax Retention Credit. And then our fourth panelist is John McNamara, the Vice President of Government Affairs at the Michigan Restaurant and Lodging Association, speaking on resources and programs for restaurant and lodging businesses. I want to thank you all for being here today, and we appreciate your expertise on these complex programs and resources. Benjamin, I'm going to hand it over to you to get started.
Okay, thank you, Mary. On behalf of Range Bank, just want to say that I'm proud to be here today to speak to the group. Obviously, we continue to deal with extenuating circumstances and trying times here, and our bank, like many others, is doing its best to help businesses in need. And we've got some updated information on the Paycheck Protection Program, which I'm sure many of you are familiar with from the first round. Let's advance the slide, please. So I've been on a number of presentations regarding PPP round 2, and one of the presenters kicked off last week with the world of PPP is a dynamic one, and I fully agree with that. We have seen a lot of iterations of this program since it was initially rolled out in 2020, and the same holds for 2021 as we get into the second draw and potentially first draw for businesses who are eligible for that who have not yet applied. We'll talk about each of those. And so I just, this is more of a informational thing than a disclaimer, I'm sure you're all aware of, but the rules have been tweaked throughout the process. And in fact, we received some updated guidance in the late hours last night as the SBA appointees, political appointees in the Trump administration transition out today, and the Biden administration transitions in and will have its own folks in place at the SBA. So it's probably not an ideal time for a change there as far as the presidency related to this SBA program and the rollout, but we have some confidence that folks have been communicating with one another, and we're going to work our way through this and hopefully have as few bumps as possible along the way. Slide, please. So this new round of PPP funding is part of the Economic Aid Act. There was $284 billion approved by Congress and signed off on by the president for new applications through March of 2021, first quarter of 2021. Those PPP applications actually opened to some financial institutions on January 11th for some specific demographic populations, and really it was very limited as far as the rollout went. Our understanding at the community bank level was that the program was going to open up this week, and a change was made. Some further guidance was issued in the middle of last week, and the program actually opened up to financial institutions with under $1 billion in assets on Friday. So we had a short period of time to be able to prepare and react for that. And there are certainly a lot of folks into the system at this point. It's opened in full to all of the lenders who are participating as of yesterday. As I mentioned, there are first draw PPP options available if a business entity did not receive funding in 2020. And of course, the second draw options, we'll get into the details on those. And again, if a borrower received a PPP loan in 2020, then you are considered to have that first draw loan, and you're not eligible to receive another first draw loan. There are some options as far as amending those that we'll talk about a little bit, but the majority of folks here are interested, I think, in the second draw loan options. Slide. So high-level loan parameters for the first draw, maximum loan amount of $10 million, and for the second draw, maximum loan amount of $2 million if you can demonstrate at least a 25% reduction in gross receipts between comparable quarters, 2019 versus 2020, or year over year if you were in business for all of 2019 and all of 2020. Slide. Repayment provisions are unchanged versus what was out there last year, so not a lot to speak of here. The covered period can be up to 24 weeks. The loan is a 5-year term. Interest rate is 1%, and the borrower's payments are deferred to when the applicant applies for and is remitted forgiveness, by the lender. So it can take a while to get that, depending on how expedient you are with getting your forgiveness application in and getting that process up and moving. Next slide, please. First draw eligibility. So again, if you did not apply in 2020 and receive funds in 2020, eligible entities that were in operation before February 15th are eligible again to draw from that. No more than 500 employees for the first draw. There are a number of new businesses and some nonprofits who have been included in this round of eligibility. So some small changes there, but they are big changes for those entities that were not eligible the first time around and now are eligible to apply. I'm not going to spend a lot of time drilling down into these various categories. Certainly can research whether or not you're an eligible entity online, or speak to your lender if you've got questions about eligibility, but they have expanded some of those categories for first draw that were not eligible in 2020. Next slide, please. So second draw eligibility differences. If you have 300 or fewer employees, remember first draw was 500 or fewer employees. So that is a major difference. The other thing that is a qualifier, and I'm going to jump ahead to the third bullet point here, a reduction of 25% of gross receipts in any quarter in 2020 compared to the same quarter in 2019, or as I mentioned earlier, year over year if open fully in 2019. And as far as the second draw eligibility goes, the loan amount that was available through the first draw is 2.5 times monthly payroll. For the second draw, for businesses with industry codes beginning with 72, and we think of the restaurant industry primarily there, you are eligible for 3.5 times as far as that multiplier goes for your loan amount, calculated based on monthly payroll. So if you were in industry code 72 and your monthly payroll was $100,000, you could get a $350,000 PPP loan versus a $250,000 if you were in one of those other industry code categories. So that's a big one. We certainly know the restaurant, bar business, food business has been hit extremely hard over the last number of months here as we've worked our way through the situation with the pandemic, and many of those entities are going to be eligible for some additional money there. Funds from the initial, just to bump down to the last bullet there, important to note that funds from your initial PPP loan must have been used or will be used prior to disbursement of second PPP loan. So you do not necessarily have to have obtained forgiveness for your first draw PPP loan in order to receive a second draw, but you do have to have dispersed the funds. Next slide, please. So some significant changes as far as covered expenses. Interest payments on debt obligations incurred prior to February of 2020. Worker expenses for PPE, including costs related to federal and health and safety guidelines, including outdoor dining. So there were a number of additional expenses that businesses incurred just related to getting set up to deal with customer traffic for PPP, and those can be included in those covered expenses. Other operational costs, supplier costs, and other employer provided insurance is eligible, and they broke that definition down to include not only health, but also dental, vision, and life. And these expenses apply to all PPP loans that are not already forgiven. If your loan has already been forgiven, then this would not apply. The loan would have been closed out. You can't go back and count those into your measurement period retroactively. But if you have not yet and you're having trouble getting to that initial loan amount that you had applied for, these categories do now apply going forward. And just a reminder that payroll expenses still need to comprise at least 60% of expenses to be eligible for full forgiveness, which everybody wants, including your lender. So we try to make sure we've got our bases covered there as we're putting these applications together for folks. Next slide, please. So some good news here, simplified forgiveness going forward. And when I mentioned there was updated guidance from the federal level late last night, this is one of the ones that has been kind of described more in full versus what we had known about it previously. There is a form out there. There is potential that form would be tweaked, but this is the first forgiveness form that we've seen. I have not had a chance to go into that in detail yet today, but the good news is we've been working on this as an industry for a long time for simplified forgiveness of loans that are under $150,000 to take the burden off of employers on that busy work level, and certainly for the folks who are dealing with processing those loans, because there's just so much time put into going through all of the materials there. So what it's going to look like is a one-page certification describing the number of employees retained, the estimated amount of PPP spent on payroll, total loan amount, and a borrower attestation with information and some limited financial data. So you'll be able to work with your lender on the simplified forgiveness documents. Those do apply for loans going forward. So if your first draw PPP loan has not been fully forgiven, this simplified forgiveness document can be used for both first draw PPP and the second draw PPP going forward. So that's great news for us. Next slide. Some key takeaways, a lot of complexities with PPP loans, obviously, and I fully expect that we'll continue to get guidance and some updates from the feds on how to handle all of this stuff. I'm sure most of you who are in business and are working toward getting either a first draw or second draw have already been in contact with your banker or CPA. Would strongly encourage you to do that at this point if you haven't already done so. There is a lot of information out there, and we're able to get some of those loans into the system now, and we have been able to get some of them processed. Applications processed already and are working on loan documents for those. So good news, the system does appear to be working. I'm sure they've got a tremendous logjam after being open for the last 24 hours to all of the financial institutions who are participating around the country. But good news there as far as being able to get things through the system. You know, as lenders, we certainly recognize that some businesses are really operating more day to day or week to week than month to month. And not that there aren't great concerns for all of our businesses, but we are doing our best to try to prioritize customers as far as getting into the system and getting that loan application for either a first or second draw in place, so we're able to issue those funds immediately and get you the help that you need. And I think that will continue. If you are, you know, the advantage of working in the community banking space is we know our customers pretty well, and we typically have a very good idea of who those folks are. So if you don't feel like you have already communicated the level of need to your financial institution, again, you know, great time to reach out to your lender and really explain where you're at in the process and try to get moved to the top of the stack to the degree possible. Some financial institutions are handling parts of the process a little bit differently than others, whether it's collecting documentation for loans. There is some flexibility for the sub 150 loans to present the financial documentation on the backside. Many banks are asking for that on the front end just to try to make sure we've got all the bases covered and we don't run into an issue when we get toward the finish line for these applications with folks. So again, if you're hearing somebody is doing something some way and your financial institution is doing it a little bit different, that is to be expected given the parameters and flexibility we've got at this point. There is optimism, and I've heard this from the feds, and I've heard it from people in the banking industry, and knock on wood, we are optimistic that there is adequate funding for businesses who qualify for this program at this point. So if you are not getting your loan approved and through immediately versus where we were at with PPP round one, where people were really worried, if I don't get my loan application in immediately, the funds are going to run out, and I could be out of luck as far as funding goes. We do not believe that will be the case at this point in time. So again, that guidance and reassurance has been given at the federal level, and we certainly hope that holds out and we can get businesses the help we need. As borrowers, you're going to be filling out something called Form 2483, that is the borrower application. As far as documentation for these, we're not in a position, most businesses are not in a position to provide tax returns at this point for 2020, and it's going to be a challenge to get those turned around for many businesses even through the end of the first quarter of this year. So the guidance that we've been given is to ask for quarterly tax forms, profit and loss broken out by quarter, and your lender can work with you on breaking out that financial information and getting it tied in to your loan package. So we're doing our best to work through this with you. We certainly understand that there is a dire need for funding for a lot of businesses across our region, and we're happy to be doing our part as part of this. There is some more information. There's a good FAQ section on the SBA's website, and provided that link at the bottom of this slide. So that's a good place to play around a little bit if you've got some general FAQ questions, or if you want to dig into different areas of the program which are detailed there. With that, I'm going to wrap up my portion of the presentation. Certainly we'll be happy to take questions as they come, and again, just want to say that, you know, appreciate everything you're doing out there to keep our economy going here in the Upper Peninsula. Understand the hand that you've been dealt has been a really tough one, but proud of everyone for their efforts, and hopefully we've got a little bit of a light at the end of the tunnel here, and looking forward to businesses being back up and open a little bit back to normal February 1st. Thank you.
Thanks, Benjamin. Shared a lot of good information, and I know businesses were happy when the portal opened on Friday, and I can only imagine how busy you've been since then, so I appreciate you taking the time to speak with us about the program. With that, Amy, thank you. With that, I'll hand it over to Amy to talk about the Michigan Small Business Survival Grant Program.
Thank you, Mary. Good afternoon, everyone. And on behalf of InvestUP, I want to thank Lake Superior Community Partnership for the opportunity to join you today and provide this platform for outreach to the UP business community. We understand the challenges today present as we navigate through 2021 and begin to recover from 2020. Although we know the programs that I'll talk about today will not meet the exceptional need that's out there, know that we are making every effort to be here for you and connect you to the resources as they become available. A quick introduction. If you could go back one slide really quick. InvestUP is an economic development organization established in 2017 by private industry partners. Since that time, we have grown to more than 20 members serving a variety of industries. And our mission is to drive prosperity across all 15 counties of the Upper Peninsula. Next slide. I've been on board with InvestUP for 3.5 months and have been tasked with focusing on initiatives to identify business needs as well as resources to meet those needs. Prior to InvestUP, I worked for the Michigan Economic Development Corporation in business development, covering both the Upper Peninsula and northern lower Michigan counties. I also worked for U.S. Senator Carl Levin in the Upper Peninsula, covering economic development projects in the UP up until his retirement. I am a born and raised UPer from Delta County, where I am coming to you live today, and very happy to focus on and be serving the Upper Peninsula. Next slide. So there are a number of COVID-related support service funding opportunities that have been initiated through 2020 and now into 21. I'll focus more in depth later on the recently opened survival grant opportunities. But for just a little bit of background, the grant opportunities that InvestUP has administered for the MEDC started with the relief grant. These awards were made back in May of 2020. It was a $10 million grant, $10 million loan statewide fund, which resulted in $500,000 in grants distributed to 80 businesses in the Upper Peninsula. Restart grants were awarded in September. That was $100 million distributed statewide and resulted in over $4.3 million in grants to 730 businesses in the UP and impacting over 5,000 jobs. The survival grants have about $55 million to disperse statewide, which will bring $2.5 million to the Upper Peninsula. These opened yesterday and will run, that window of opportunity will run through noon on Friday. Next slide. There are 2 survival grant programs opening up this week. Both will provide funding to eligible small businesses impacted by COVID-19 and the gatherings and mask order issued by the Michigan Department of Health and Human Services in December. Applicants are only eligible to apply for one of these programs. First, the Small Business Survival Program, and the second is the Stages Survival Program. I wanted to take a little bit of time to differentiate between the two to hopefully try and eliminate any confusion. Both programs are state of Michigan appropriated dollars. The Small Business Survival Grants will bring $2.5 million to the Upper Peninsula small businesses. It will be administered by InvestUP, and applications opened up yesterday, and they will close Friday at noon. The Michigan Stages Survival Grants will bring $3.5 million statewide to entertainment venues impacted by the pandemic and the MDHHS orders. It offers up to $40,000 in one-time grants to eligible Michigan live music and entertainment venues, and it will be administered by the Michigan Independent Venue and Promoter Association. These applications will open up tomorrow and close on January 28th. Next slide. The program details for the Small Business Survival Grant can be found at the MEDC website. This is the link to the website. It includes full application questionnaire so you can review them before you get started. There are frequently asked questions, and there's also a tutorial video that will walk you through both the registration and the application process. I would highly recommend taking the 20 minutes to watch the tutorial before starting the application. It is very helpful. For questions, the MEDC call center is also available, and I'll post that contact information in the chat when I'm done here. If you are unable to access the MEDC through either the call-in center or email address, you can reach out to us and we can help elevate your questions to the MEDC. ConnectSpace is the platform MEDC is using to accept grant applications. They will not be accepting any applications outside of this format. If you applied for a Restart grant back in early fall, you may already have a registration at ConnectSpace and can use the login credentials that you established at that time. This is not a first come, first served process. All applications submitted within the established timeframe will be considered. Just to give you a little idea of what the volume that's coming in, as of 1 o'clock yesterday, there were 15,000 applications in queue. There is, as I'm sure we all expect, tremendous demand for this grant opportunity. It may be helpful for those that are applying to try during off-peak hours, outside of regular business hours, due to the high volume of the applications so far. Next slide. Now for a little bit more detail on the program. In order to be eligible for funding under the program, small businesses must be a for-profit or nonprofit company and meet all of this criteria. Businesses have to have had 1 to 100 employees, including full-time, part-time, and owner employees on a worldwide basis as of November 17th of 2020. Business has to be in an industry that demonstrates it is affected by the MDHHS orders. The business will be asked to demonstrate working capital needs to support payroll expenses, rent, mortgage payments, utility expenses, or other similar expenses. Applicants will need to demonstrate an income loss as a result of the orders, providing gross revenues from November through December 2019 and 2020. As well as annual gross revenues. Live music and entertainment venues that are eligible for funds under the Michigan Stages Survival Grant Program are not eligible to apply for the Small Business Survival Grant. Next slide. Eligible businesses will largely fall into one of the categories here. However, businesses in other industries may be considered as long as they can demonstrate they meet the other eligibility. The food service establishments include restaurants, bars, coffee shops, bakeries, catering, breweries, tea shops, banquet facilities, and other food and beverage service providers. Retail includes boutiques, bookstores, hardware, anything being sold that is not food. Exercise facilities such as gyms, studios, pool facilities, ice skating rinks, and organized sports. If you are an entertainment venue but not eligible for the Stages grant, you can apply through Small Business Survival Grants. Recreation facilities and places of public amusement include bowling alleys, arcades, and bingo halls. Nonprofits include libraries, museums, churches, religious centers, and advocacy organizations. Personal care services include hair, nail, tanning, massage, and spa services. Schools are pretty self-explanatory. Childcare includes youth camps. Transportation includes limo services. There's also an other category. If you do not fall within one of these designated industries, you can select other, and you'll be asked to insert which industry you operate in. Next slide, please. Statewide, the grant funding is distributed to the 15 local or nonprofit economic development organizations As I mentioned before, InvestUP will administer the UP grants and will review submitted applications from businesses located in the region and provide grants to eligible small businesses that have met all of the eligibility criteria. EDOs will have discretion on grant awards up to the maximum of $20,000 for businesses that are fully closed and $15,000 to businesses that have been partially closed or otherwise are open and can demonstrate an impact. Applicant eligible expenses include payroll expenses, rent, mortgage payments, utility expenses, or costs related to reopening the businesses. Expenses must be incurred and paid by the applicant during the period beginning November 18th through beginning November 18th, 2020 and forward through April 30th, 2021. Expenses not deemed eligible would include things like reimbursement to donors for donated items or services, workforce bonuses, severance pay, or legal settlements. Next slide, please. A quick timeline. As I mentioned yesterday, the application window opened up at 9 a.m. The application window closes at noon on Friday. Beginning the week of January 25th, EDOs will be processing applications, scoring them, and making award determinations. Funds can be expected to be dispersed between January 29th through February 28th. The grant awards will be made public by the MEDC per the statute that the funds were provided under. Next slide. This is not part of the Michigan Small Business Survival Program, but I wanted to mention this opportunity to provide feedback on how businesses are faring in the region. The Minneapolis Federal Reserve continues to gauge economic effects of the pandemic in the 9th District, which includes Michigan's Upper Peninsula. So they are partnering with local and state chambers of commerce, state and regional economic development associations, and other business groups to collect this information. We ask that you take 5 minutes to complete their survey to help them understand the conditions that will shape monetary policy. We understand the economic landscape is especially important right now, with debate renewing about what, if any, additional assistance should be pushed out, especially on the federal level. All responses are anonymous, and the Federal Reserve will share comments with survey partners and potentially the public to better spotlight challenges facing businesses. So this is an opportunity for your feedback to help shape some economic policy, development of additional resources and assistance moving forward. And next slide. So this concludes my overview of the Survival Grant Program, and we'll be happy to take any questions later on, I guess.
Great, thank you so much, Amy. Appreciate you sharing information on the Survival and Stage Grant, especially with such a quick turnaround for applying for them. Just a reminder to everybody that if you have questions, to make sure you submit those into the question pane, and we'll get to them at the end. Our next panelist is Sarah, speaking on the Employee Tax Retention Credit. So Sarah, I will hand it over to you.
Thank you so much, Mary. My name is Sarah with Maynard Costerisan. We are a regional firm. Our headquarters is in the greater Lansing area in Michigan, but given all of the virtual things, even before COVID hit, we actually have clients all over the state and the country, being that everybody was thrust into this virtual world. I think we're all learning how to do that better than ever. I'm going to repeat myself just a couple times throughout my presentation, because the Employee Retention Credit is actually one that was in effect back when the CARES Act was initially settled back in April, May timeframe. And it didn't get the notoriety that the PPP, the Paycheck Protection Program, did, because at that time you couldn't do both programs. You couldn't do the Paycheck Protection Program at the same time you were going to get the Employee Retention Credit. Some of that has changed. So there are some significant things that we're going to talk about in the next few minutes that we're really stressing to our clients to make sure that you take a look at. Next slide, please. So the employee retention credit, what is it? It is a refundable tax credit for eligible wages and group health. So in the recent legislation that the Consolidated Appropriations Act that came out late December, early January of this year, one of the things that they highlighted is now that it includes group health, and that before that wasn't part of it. Big picture, the credit is a 50% credit for wages up to $10,000 per employee for wages paid from March 12th of 20 through December 31st of 2020. So this is last year's credit, and I'm going to go over this in detail because it can be effective retroactively. Again, I'm going to say this part over and over and over again because now you can have had the PPP round one and do this. The other thing that the recent legislation did is that it extended it. So now it's starting January 1st of 21, there's a 70% credit for wages up to $10,000 per employee per quarter. And this is going to go through June 30th of 2020, so 2021, pardon me. So you have 2 quarters that you can get that credit in 2021. All businesses and nonprofits are eligible for this. Again, self-employed individuals are not. We've had a lot of questions what's available out there for sole proprietors, self-employed individuals, and as the employee retention credit. This is all based on employee taxes, and it's an employer payroll tax credit, so that wouldn't apply for this program. But again, I put this in a bullet point, so I think this is already slide 2 and already the 3rd time I've said this, but you can utilize the employee retention credit even if you had a PPP. So round 1 PPP as well as this new PPP second draw. Next slide, please. So how it works, so as I said, it's a refundable payroll tax credit. For 2020, it's a rate of 50%, and for 21, 70% of qualified wages during a calendar quarter. And what you'll do is you'll report this on your quarterly 941. It reduces your total employer payroll tax liability. It applies to the first $10,000 of compensation per employee as of the new legislation. As I said, that includes the health benefits. And we do have to make note that you can't double dip. So if you use these employee payroll wages for the PPP forgiveness, you can't use them for the employee retention credit. If you used them for qualified sick and family leave, they are not included in this employee retention credit. And actually the worksheet within your quarterly 941 reporting, it's worksheet 1, there is a section for the qualified sick and family leave. So it's pretty clear that you can't put the same numbers in both buckets. Next slide, please. So for 2020, again, we're going to go over kind of a question and answer thing. So the eligibility to be able to take this credit was you had to either experience a 50% reduction in gross receipts for any quarter within 2020 compared to that same quarter the previous year. And you are eligible until the end of the quarter when your receipts are back up to 80% of the 2019 level. So for example, if you went below that 50% level in second quarter, which many businesses did, that's when everything was getting shut down, and you don't get back up into your 80% of your normal receipts until November, you actually can get credit for those 3 quarters, for second quarter, third quarter, fourth quarter, because again, it's through the end of the quarter that you reach your 80% level. So this is a huge opportunity for a lot of small businesses. The other criteria, even if you're not, you haven't seen a dip in your gross receipts of a 50% or more, if you were fully or partially shut down because of a government order. So this would pretty much be everyone except for offices that were remote or essential employees. You were shut down for some piece. You are eligible for the days that you're shut down. So we definitely recommend people first look at that 50% reduction before you look at the step 2, because you're going to get a greater credit for if you have a quarter that you're 50% below your 2019 gross receipts. But either way, you do have an opportunity. I would say you still need to make sure that you aren't double dipping those wages or what you're using those wages for. So if you're shut down because of a government order or something like that, then you get your paycheck protection funds. As long as you don't use the funds for your forgiveness application that you were paying people during the time you were shut down, you can get a credit for that time period. we'll definitely answer questions going forward, but it is an interesting calculation that we've been doing for a lot of our clients. Next slide, please. So the calculation, as I said, what we've had people do, and we've been helping people, is we literally just have an Excel document or from your payroll processor that shows all of the gross wages and benefits expense for employees. So again, for 2020, you take that full list that isn't included in any forgiveness application. It's not part of the sick and family leave wages, but you take that whole list. You max anybody that hits the 10,000 level, and we've got a lot of clients right now that are going retroactive, so they're looking at all of 2020 because they did receive the PPP funding, so they hadn't done anything with this credit prior to now. Now they're going back and saying, okay, well, before I submit my forgiveness application, I need to take a look at this. You make your list of all of your people, you max everybody out at $10,000, anybody that hit that. Again, for 2020, it's the whole entire period from March until December 31st. And you multiply that total number times 50%, that's your credit. So that's going to reduce your employer payroll tax. If you had over 100 FTEs in 2019, so this is just for the 2020 retroactive credit, you can only use the wages paid to employees that weren't working. If you had under 100 employees, you can use the wages for everybody. Over 100 employees, you can only use those wages for employees that weren't working. If you aren't paying people, but you are providing, you didn't take away the health care when you furloughed some employees or something like that, the health care can be used in this calculation if it's just the health care only. Next slide, please. There we go. So probably the last time I think that I will say this in here, but we have to reiterate that PPP-1 borrowers who were previously ineligible, because until earlier this month, as I said, you couldn't do both. Now you can. So if you have not filed for forgiveness for PPP-1, we recommend, as Benjamin was saying earlier, 60% of your PPP funds have to be used for payroll in order to get your full forgiveness. We recommend trying to hit that 60% mark. You've got a lot more flexibility of what that 40% can be. The other payroll funds that you've paid out, you can use for this employee retention credit. If you've already filed for forgiveness, you can still claim that credit on any eligible period of payroll that's outside your covered period. And one of the things I'm actually putting in the chat right now is this decision tree. If you want, Mary, if you could click on that link, please. There we go. Thank you. So one of the things that we did, because this, I know that it gets kind of jumbled when you're trying to decide, okay, am I eligible? Am I not eligible? And we're just talking about 2020. But again, our office has seen such opportunity for our clients to go backwards and get some of this funding from the employee retention credit. We created this decision tree, and it probably is relatively small on your screen, but it first asks you, it goes through all the eligibility requirements that we said, and then it walks you through the decision if you've filed for forgiveness or if you haven't filed for forgiveness. So something like this, like I said, I put the link in the chat. It's here in the presentation. Please use something like this. Talk to your tax professionals, your accountants, see if you can do this credit, because we really have seen, again, a lot of people being able to benefit in a way that they didn't think that they could have before, because now they're calculating it for all of 2020's credit. So then if you go back to the presentation and go to the next slide, I just have a quick snippet of where you're going to report this on the 941. So this is just a screenshot of the worksheet 1. So it's step 3 within the worksheet 1, and you can see line 3A would be your qualified wages. So again, this is for 2020. Many people have already submitted their quarterly 941s for fourth quarter. If you've done that, it looks like you're just going to be required to do an amended 941. We have been talking to some of the different payroll companies and seeing if they've been hearing any other options that people have out there, because obviously payroll processors are trying to get the quarterly 941s done quickly. If it hasn't been done yet, I would say put a slight hold on it. I mean, obviously you don't want to file it late, but you do want to make sure you can get this credit in. If you have already submitted it, it would just be an amended 941. But 3A would just be the qualified wages. This is up to $10,000 per employee for the period. 3B is the health. You add them together, and that retention credit on that for 2020 is just 50% of that. As I said, this reduces your total employer payroll tax that you're supposed to be remitting on a quarterly basis if your credit is higher than what you owe, which especially because we're doing these retro, we have many clients that it is higher than what they've owed for fourth quarter, then you can get a check back from the IRS. I am not opining to how quickly that will be at your doorstep, but that is the theory behind it. Next slide, please. So then for 2021, again, we definitely recommend looking backwards, look at 2020, but then also to plan for 2021. There are even more benefits and some leniency, some greater leniency on who is eligible. So now, as opposed to the 50% reduction in gross receipts that we talked about for 2020, now you take your quarters, again, this is first and second quarter, calendar quarter for 2021, and all you have to prove is a 20% reduction in gross receipts to that same quarter for 2019. You can, if you weren't in business for all of 2020 or not for all of 2019, you can use a similar quarter to 2020 to get that eligibility, and you just have to keep those support in order if you ever did get audited from the IRS on that. Again, it still has the criteria if you were fully or partially shut down to a government order. I know that we've talked a little bit about the restaurant industry. Obviously, if you can break apart your business, a golf course could do something like this too. And they're looking at some partially shut down. If their restaurant facilities are shut down, but the course isn't necessarily shut down or something like that, you can still get partial shutdown credit for that. Next slide, please. So again, this is a similar calculation, but even better. So instead of the 50% gross wages, this is actually 70% of eligible gross wages and healthcare expenses per employee per quarter up to that $10,000 max. So previously for 2020, it was from March 13th through December 31st. That whole period was up to $10,000 per employee. Now it's from January 1st to March 31st. That's your $10,000 max per employee. It starts over again on April 1st. It's 10,000 max of 10,000 wages per employee per quarter, which means a max credit of $7,000 per quarter per employee, $14,000 for the 6 months in 21. So again, depending on your total employees, that adds up pretty quickly. The other thing that they changed is the FTE requirement. So previously in 2020, it was those employers that were over 100 FTEs. They had to use wages that were paid to people that were not working. Now that threshold has increased to 500 FTEs. So if you have less than 500 FTEs, you can get credit for all of your workforce. Again, as long as you're not including these wages on your paycheck protection forgiveness application if you've got stuff rolling in for round 2. Next slide, please. So again, I touched on this briefly, but if you weren't in operation in the corresponding quarter in 2019 for 2020, you can use whichever 2019 quarter you started. That would be your base period. And if you started in the middle of the quarter, you can do those estimates. Again, you just need to hold or maintain that supporting documentation in the case that you are ever audited. In 2020, if you began in 2020, you'd be limited to that fully or partially shut down requirement. And then for 2021, if you weren't in operation in that same quarter in 2019, you would just use the 2020 quarter instead of that. Next slide, please. So again, very similar to Benjamin, we have felt in the accounting industry, probably very similar to most bankers and everybody else in the country, to be quite honest, that we were chasing our tails around in circles every time something changed or we thought we knew what was fact as of that day. So we have, since last April, been having a slide within every single presentation that says this is our understanding and our knowledge as of today in case anything changes. So this is just a short disclaimer. Again, next slide, please. I appreciate being here. Definitely happy to take any questions. The IRS, one final tidbit, and then I know questions are at the end. But one final tidbit, the employee retention credit, I will put in the link, the direct link to the IRS site where they have some information on employee retention credit, but it is not updated for the new legislation. Many of the definitions and the terminology, that stuff hasn't changed, so it still is a good resource. But thank you very much, Mary. I think that's it until questions.
Thanks, Sarah. With that being a new tax credit, I know that prior to this webinar, we received a lot of questions on how it works, and I just learned a lot of new information that I wasn't aware of, so thank you. Last but not least, we have John. John, I'm going to hand it over to you to discuss resources available for restaurants and lodging businesses.
Yeah, thank you for having me today. As was said, my name is John McNamara. I'm the Vice President of Government Affairs for the Michigan Restaurant and Lodging Association. And just for those who aren't familiar, we have about 5,000 members, both, obviously hotels, banquet centers, motels, resorts, and have been around for about 100 years. And as been mentioned before, obviously the state of the industry is really terrible right now. 1 in 3 restaurants in Michigan is gone for good. That's roughly about, 1 in 5, and restaurants is gone for good. That's right around 3,000. So we had a big legislative agenda ready for last session. Then it became what can we do to help our restaurants, help the employees survive and thrive again? And obviously there was enhanced unemployment at the federal level, which helped. We had $2.5 million that was dispersed in the early fall, and that helped. But we knew this was going to be sort of a multi-year comeback, and that we were going to need a really big push. So if you go to the next slide, please, that'd be great. So this brings us to our employee assistance grant. So what this is up to $1,650 for those impacted specifically by the orders that were put down by DHHS in November. The applications went live on January 15th. They go through January 25th, and they are available at MRLAEF, which is Michigan Restaurant Lodging Association Educational Foundation.org/money. And I will stress, going to the website is going to be the best way to fill the application. And if you have questions, there's a way to submit an email there. We did have a sort of in-office phone system set up. However, unfortunately, due to the potential for violence at the Capitol over the weekend and then leading up to Inauguration Day, those people who are in the office part-time are now at home. So voicemail is being checked, but the website and the email address on the website is the best way to get there. So again, this is up to $1,650 for those who are impacted. And specifically, who is that? We can go to the next slide. So who can apply? So obviously restaurants, hotels, motels, bed and breakfast resorts, bars, food trucks, bowling alleys, theaters, nightclubs, golf courses, banquet halls, caterers, casinos, cafeterias. And I do want to add that this is not a either or grant. So, if someone applied through the Barstool Fund, or if they got an earlier grant from somewhere else, that does not exclude them from getting this. And obviously priority will be given to those businesses that are currently closed. For general record keeping sake, as of Monday morning, we had about 40,000 applications in. I'm not exactly sure how many are in there now, but the response was very robust, which is great because $45 million is a lot of money to dole out. And luckily the website has only crashed once so far. So if we can go to the next slide, we can talk about sort of what needs to be done. So we need personal information, which is legal name, mailing address, social security number, and the date of hire. Unfortunately, due to our agreement with Treasury, they did require a social security number was required to apply. So if there are employees without a social security number, unfortunately, they will not be eligible. Employer information, which is business name, manager name, phone and email address. Proof of employment. Proof of employment is a pay stub showing proof of employment on November 1st through 18th, or a letter signed by manager, company shareholder, or company owner. And the reason there's two options there is there could have been people who were intended to be brought back in November and never were due to the rumor of a shutdown, and they never chose to open, so you wouldn't have a pay stub. But we did want to make sure that those people were eligible if they weren't brought back, obviously due to no fault of their own, really no fault of anyone whatsoever. And all of this, there's at the relief.org/money, you just upload this information and it's sent. We did make it as easy as possible. We learned a lot from the last time of doing this of $2.5 million. And unfortunately, the number of people who were not able to provide a simple pay stub left them out of the opportunity to get there. So hopefully everyone can get that and get there. And then we do need a W-9 as well, because these are obviously taxable dollars. And then if we go to the last slide, they can text money to 22452, and that will give updates not only on what DHHS is doing, but also what's going on with the grant and their application. Unfortunately, due to the fact that these don't close till toward the end of the month, it will probably be until late February or early March until these grants are received. It's just the amount of person power it's going to take to sort through all these. We're still working with a limited staff due to COVID. We've not brought everyone back. So it will take some time, but the money will get out the door as soon as humanly possible. So that is the employee assistance grant. And when it's time's right, I'm happy to answer any questions.
Great, thank you, John. I know not only businesses are struggling and frustrated, but the employees too. So this is great information for business owners to be able to pass on to their employees.
Yep.
With that, we're going to begin answering questions. So as a reminder, you can still submit those questions through the question pane in your attendee control panel. We have received some. So to get started, I'm going to start with Benjamin. If you apply for the EIDL grant, will that affect applying for the PPP loan?
So they've made a change there where the EIDL money was being deducted from your PPP amount in the past. And with the updated guidance, they are not reducing the loan amount when you're dealing with your banker on that. So it's going to be, and I think they're looking at retroactively forgiving that and taking it out. So those are separate entities, and my understanding based on the last guidance I had read is they are going to continue to separate that going forward.
Great, thank you. Amy, this one is for you. If I'm in the queue and it passes 12 p.m. on Friday, will I still be allowed to apply for the grant once it closes?
We actually have posed that question to the MEDC and we haven't received a response yet. So I don't have an answer for you right now, but if you want to reach out to me later, we'll try to track that down for you.
Perfect. And if you get the answer to me, I can also we can send that out to the entire group. That way that they all get the answer to that question.
Okay, perfect. That'll work.
Sarah, this question's for you. We already took the ERC credit for 2 quarters in 2020. Could we still take the credit if we qualify for 2021? Our change in gross receipts did not qualify us for the 4th quarter of 2020, but we would qualify now with the 20% reduction.
Yep, it's a new calculation starting off on January 1st, so absolutely, you are eligible again.
Great, thank you. John, for the program that you presented on, if you're a self-employed individual, are you able to qualify for this funding? For instance, I work in a food truck, but it's my business, I'm self-employed.
If you have some type of pay stub that says you worked at that point, you are eligible. Or in theory, I mean, if you're the business owner, you could write a letter that would then make, allow you to do that. But then also I would look at the other grant, the $55 million through MEDC as well, which is intended more for business owners. But if you're an independent contractor and you can show a pay stub or get a letter from your employer that you would have been working, then yes, you're eligible.
Great, thank you. And then John, another one to you. If employees are currently working, do they qualify for the employee assistance grant? And even if they have reduced hours?
Absolutely, yes. Yeah, no, I mean, the intention of this is to help out, and we know there are people who might have been coming in for, 2 or 3 4-hour shifts to help with takeout, but no, you're absolutely still eligible to apply.
Great. This one is for everybody. I'm a new business owner that started a month before the March stay-at-home order went into effect. I don't have any financial history. Can I apply for any of these programs? I don't know, Benjamin, are they eligible for PPP funding?
Yeah, so I'm going to be cautious on answering this one because there are restrictions for seasonal businesses versus businesses which are not. So, there are businesses that were in place prior to February should be eligible. But again, I would consult with whomever your banker or tax professional is on that.
Okay, perfect. And I was just asked to repeat the question, so I'm going to repeat it. I'm a new business that started a month before the March stay-at-home order went into effect, so they don't have any financial history, and they're wondering if they can apply for any of these programs.
Got it. Thank you. That was me, Sarah, that asked you to repeat it. So I would absolutely agree with Benjamin. It depends on what that date is. That February 15th is a big deal. And then with the employee retention credit, there is some opportunity there as long as you were in business during 2020. So I think we should be able to provide those slides. Is that right? Will you provide the slides to everybody or post them somewhere? So there is some consideration if you go back quarter by quarter instead of comparing it to 2019, since you wouldn't have been in business then. So you should be able to compare it to the previous quarter instead of to 2019.
Perfect. And then Amy, they're eligible for the MEDC grants, correct?
I believe so.
Okay. All right, so let's see here. We've got a few more questions. Benjamin, this one's for you. Yesterday, we had trouble with the PPP portal, and it was scheduled to be down until 2 a.m. Is it first come, first serve, or would you expect the dollars to run out?
Yeah, so the PPP portal was down for several hours last night for patching. Not a surprise there, as they are dealing with the large influx of applications. Again, as I said in my presentation, we are optimistic and hopeful that the funds are going to be adequate for all businesses who are eligible for either first draw or second draw this time around. At this point, it is first come, first serve based on how the SBA is taking those applications from lenders. So, there are pieces of that I guess I'm really not sure of from the SBA side, but we are getting them into the queue as they come in. And like I said, I think most financial institutions are trying to prioritize borrowers who are in dire need of those funds and getting them to the top of the stack as quickly as possible in hopes that they can get processed quickly as well.
Great, thank you. Sarah, are seasonal businesses eligible for the tax credit?
Yes. Yep. Because you're comparing it quarter by quarter to 2019, so you should have that comparative information there. So definitely.
Great, thank you. I know that we've got a lot of those in Michigan, so that's good. Amy, does applying for previous MEDC grants disqualify me from the recent grant?
No, it does not. You can still apply. You will be asked I believe you will be asked state, local, and federal funds that you have received in the application itself. but it does not disqualify you.
Great. John, this one's for you. Do you expect restaurants to be able to reopen fully February 1st?
I do. So I can say with the certainty that February 1st is for sure the date. As to capacity limits, curfew, what type of stipulations might be in place, we're still working with the department. We had calls last night. I have calls still today and then into tomorrow. But it sounds like February 1st. Yeah, February 1st is a good solid date.
Great news. And that was actually my last question. And so we're going to end it on a good note. But thank you to all of our panelists, and thanks everyone for attending today's webinar. If you have any other questions, please don't hesitate to reach out to the Lake Superior Community Partnership. And you will also receive a follow-up email with the presentation slides and a link to view a recording of today's webinar. So on behalf of the LSCP, thank you for joining us, and I hope that you all enjoy the rest of your afternoon.
Thank you so much.
Thank you.
Thank you.